Central banks and employment data. Hello and welcome to our weekly outlook. After Canada, Eurozone and Japan, now it's time for central banks in the United States, United Kingdom and Australia to have their monetary policy meeting and interest rate decisions. While raising inflation, supply chain disruption and slowing economies are the current concerns all across the markets, these meetings and their decisions will be so important. At the same time, we have ongoing earnings reports and many other economic data like ADP, NFP, and PMI numbers. Let's check them out together. Number 1. Chinese PMI numbers. After weakness in retail sales and shocking GDP growth in the third quarter, now the PMI numbers will give us more data and information on how the second global economy is recovering from the latest COVID-related restrictions and regulations introduced by authorities in recent months. With all these weaknesses, still we are waiting for an economic improvement by 8% at 2021. Therefore, with the very slow increase, still we are waiting for an increase in both manufacturing and service sectors in October as well as it was in September. With these expected data, the Chinese yen is still holding its strong position against US dollar. Number 2. Monetary policy meeting and interest rate decisions in Australia. After much better than expected retail sales numbers and sharp increase of short-term bond yields, we can expect the interest rates hikes even earlier than the previous expectations. With hawkish decisions in Canada and Ms. Lagarde confessing about the higher inflation for a longer time, it's not far-fetched to expect the similar policies in Australia. The hawkish expected tone from RBA is supposed to help the Aussie against its crisis. Number 3. FOMC meeting. The market already priced in a tapering with at least $15 billion monthly, with ending at the middle of 2022 and expecting to be announced officially in this week. On the interest rate front, the market will focus on the details like numbers of votes for the rate hikes against holding rate policy and Federal Reserve outlook about the inflation and labor market. Most actually an announcement and Mr. Powell's speech. As the market is expecting to have a hawkish tone from the FOMC meeting, it's expected to see the US dollar index increasing after the ending the two-day meetings on Wednesday. Number 4. BOE meeting. In the past weeks, with increasing inflation and acceptable economic recovery, some monetary policy committee members of Bank of England, including Governor Bailey, were talking about the necessity of action by this bank. Now, investors counting on 15 basic point interest rate hikes in this week, but most financial market analysts are expecting that rates to be held for now and we will see the raise at the beginning of 2022. At the same time, we need to focus on economic outlook and BOE expects for the GDP and inflation numbers. Hawkish decisions will lift the pound against its crosses in the forex market, while any dovish or less than hawkish expected policies will put it under pressure. And finally, number 5, US employment data. Like every first Friday of the first week of each month, we will have the US monthly non-farm employment numbers. Payrolls increased by 194K last month and missed the estimates. On the other hand, the unemployment rate has already eased by 1.1% in the past 3 months. For October, we are waiting to see the unemployment level ease to 4.7% with 380K created jobs. After mid-week expected hawkish policies by the Federal Reserve, stock markets can ease, and these positive data are expected to support the leading US indices including Dow Jones Industrial Average, after the weakness at the beginning of the week. Thanks for being with us and hope this week will be an amazing week for you.